evening and welcome to the Australian Stock Market Show. It's been a very rainy day here in Melbourne and we're happy to be, inside and out of the rain and in the studio while we've got lots of emails to get through. So it's a big night tonight. The best bit is all you have to do is sit back, relax and get ready to learn as we share with you in our upfront, no BS approach to sharing our thoughts on all things stock market. In tonight's show, we'll cover many exciting stocks, including Telstra, S32, Paladin, Simic Group, and many more. Our main topic for tonight is top 5 Australian cannabis stocks to invest in 2021. Hello, I'm your host, Janine Cox, and joining me tonight is Dale Gillham, and we're Australia's most trusted stock market educators. How are you?
Good. I'm awesome.
Someone told me you're an expert at curries.
Absolutely.
Been doing it for a long time?
I'm a curryinator. Curryinator.
Really?
Curryinator, yeah. Once you've had one of my curries, you're terminated. Something like that. No. I was chatting to somebody on the phone today and they said, what's the weather in Melbourne? I said, yeah, we're having weather today.
We're having Melbourne weather today.
We're having weather today. It was howling winds this morning, but it was warm.
Yeah.
And then it went wind stop, it got cold, and then it got rainy, and I don't know.
Yep.
But that's the fun about being in Melbourne, isn't it?
The rest is history now.
Okay. We better get on with the show anyway, so let's get into it. So tonight, if tonight is your first time watching your show, welcome. By watching, you will find that Janine and I are a little bit different than you would normally see on YouTube, as we are just not about the hype and get rich quick schemes and ideas, but rather we share with you decades of experience of solid insights and a better way to profit from the markets. Now, we do appreciate you all taking the time to join us here, and you'll also be rewarded tonight as we're set to share some valuable insights that will ensure you profit more if you choose to follow them.
Now, Dale, again, we've received loads of emails, and as usual, we've had to edit many of them down to focus on questions asked. And as always, we'll give preference to those who support our channel and subscribe. So click on that subscribe button now and show your appreciation and support for the team that's bringing you tonight's show. Moving on, it is the 4th Tuesday in the month, and this means we look at world currencies. So let's get into the charts now.
Okay. Now, on your screen right now is our currencies. It's the watch list of all the currencies, isn't it?
Yeah, so at the top there, we can see for the month, we've got the Australian dollar versus the US dollar. We're actually up 0.54%, so quite strong there against the US dollar at the moment. The Aussie dollar versus the Hong Kong dollar, 0.43%. So that's pretty much line ball with what's happening against the US currency. Australian dollar versus the Singapore dollar, 0.3% up. Then we've got the Australian dollar versus the Japanese yen. It's pretty flat. So have you been hearing reasons as to why our currency's been so strong lately?
Look, I think partly because, obviously this is this month at the moment. Partly I think iron ore and everything's a little bit flat the last week or two. So I know when commodities are running, our dollar's a lot stronger. China's pulled back a little bit on that sort of area, but I haven't really heard too much about why our currency's not super strong at the moment. But it has been doing really, really well the last 12 months, hasn't it? Yeah,
I'm pretty excited about the currency at the moment. So let's just...
What are you excited about?
Oh, look, it depends what you're trading though, doesn't it? So, no one's going overseas at the moment.
So you're not giving me much yet. Give us something.
No one's going overseas at the moment. So it's not like we need to purchase currency overseas, but if you're purchasing goods that are coming from overseas, then potentially that can help you. So things like televisions and appliances and things for around the house might be good. And at the moment, we've got a bit of a housing boom going on. So people are looking to furnish their homes with things that are made overseas. So that, there's just an example of what your buying power is likely to achieve. But how are we going against the Australian New Zealand dollar?
Okay.
We're actually in the negative, so minus 2.5%.
Yeah.
The Chinese renminbi, we're down 0.34%.
Yep.
So obviously it's going to depend on where you're purchasing those appliances, how you do. So the Australian dollar versus the euro, minus 1%.
Yep.
The Swiss, against the Swiss franc, we're actually down 1.25%. And then against the Canadian dollar, minus 1.5%. British pound sterling, we're actually down almost 2%.
So how are we going on a yearly basis? Obviously that's this month so far. So how are we going on the yearly basis on those?
Okay, look, it's important, isn't it, to look at the yearly time frame as well as the monthly time time frame. So over the year, the Australian dollar versus the Japanese yen up 6%. So do you remember the days when everything used to come from Japan? It wasn't from China, so our buying power is really quite good there. Australian dollar versus the Swiss franc up almost 2%. We come down to the Australian dollar versus the Singapore dollar. We're up around 1%, 1.1%. Australian dollar versus the Hong Kong dollar, 0.76%. So we're up overall for the year, which is a good thing.
Yep.
And then against the US dollar, we're up 0.58. So we saw the gains for the month, which are almost what we're seeing for the whole year.
Yeah.
Pretty close to that. And so, look, if we skip right down and we head into the negative territory, we're seeing Australian dollar versus the Chinese renminbi down 0.8 versus the British pound. We're actually down almost 3% there. And Australian dollar versus the Canadian dollar minus 4.8%.
So I'm not travelling to Canada or Britain.
No, if we think about this in terms of potentially travel plans that people may have years out, so not right now but down the track, with the currency being down, and if we look at it as a contrarian looks at the markets or currencies, so would you be picking the Australian dollar versus the Canadian dollar to be in reverse next year?
Oh, absolutely. Absolutely. I definitely would be. And obviously I'm looking at travelling where I'm going to go travelling next year, but obviously I don't expect to travel this year, but I think we do need to have a good look at that. But it's also about trade too, and there's lots of supply chain issues right around the world, especially with semiconductors, that sort of stuff. We can't get enough cars built. A whole range of stuff's going on at the moment. So,
well, look, that's all from us at the moment about the currency markets. Now it's time to get into our first email for the night. Okay.
Now, our first email tonight is from Joe. Now, Joe says, "Hi, Dale and Janine, could you please take a look at Chorus Limited? I bought it for more than $7.20 in 2020 as part of my portfolio, but it appears to be still falling. Now, I'm not sure if it may have been having this fall in preparation for another bullish run like it had back in 2021. Actually, I'm assuming you meant 2020, Joe. Thanks, Joe. So let's go and have a look at this stock.
Okay, so Chorus Limited, it's quite a volatile stock, isn't it? Just looking at the monthly chart, we can see it's been sold off really heavily. Now, if I just have a quick look at where this stock's at from its all-time high, so it's traded down, it's roughly about 30% down from its all-time high. You would think at this point that it potentially may have a bit of a rebound, because looking at the last 2 months, it hasn't kept falling. It's trying to slow the decline down. Doesn't mean it won't, keep going. So it's not a blanket black and white rule, but it's also interesting that it stopped at around $6.
It is interesting. Joe bought it around here, obviously on the way up, and has held it all the way down. There's plenty of exit signals through there, but do you think it's going to go up from here or not?
Look, I think if it gets, there's always an if, isn't there?
It's a big if. I think it's looking bearish, but...
Yeah, it does, because it's in that downtrend, like you say, but if it gets above this peak here, this high in April, the week ending the 30th of April, which is 639, then it has a reasonable probability of moving up for a while and could head up closer to around the 650, 660 mark in the short term anyway. If it pulls back below last week's bar, well, it's all over. The trend's going to continue to decline. Yeah,
I think this is a good example with Joe why we should be using a stop loss, or at least some sort of exit strategy on it as well, because right now it's sort of 50-50, isn't it?
Yeah, but it's really hard for somebody who's into the stock market. They don't have the training in the rules, and then they're watching the show and they're seeing stocks decline, hearing us talk about the fact that it's in a downtrend and it's below their buy price. Yep. But so how does somebody get their head around that?
Go and ring you.
Ring me?
Yeah, ring you. Janine will tell you, Joe.
I'll read Dale's book.
Read my book. Okay. Well, that's it for seeing you.
All right. We've got an email from Phil. Hey, guys and gals. I recently took your advice on buying a top 20 stock and bought CBA at $90 and have seen it grow 8%. So my initial fears of buying stocks and not having that confidence has been eased. By the way, this stock is going, I feel a little more confident, but also have my 15% stop loss on it and a real plan of how to exit. I'm now looking at my second stock and I quite like the look of S32 and it's been trending nicely. Thoughts on this? Cheers, Phil. So S32.
What a good email. That's a really nice email, yeah.
You just want to talk about that for a little bit?
No, but you can talk about it. I just thought I'd make a comment.
Well, you interrupted me.
Oh, sorry, I apologise. Go ahead.
So S32,
So
let's talk about the stock, okay? Now, the interesting thing about S32 is it has reached a really important level. Around that $3 mark is historical resistance for the stock. So you can see across here there are a number of peaks and troughs over there. And so the stock has hit that again and it's closed down. So there's a potential here for a bit of a slowdown right now in the share price. And we can see that over the last couple of months, the highs have been getting higher, but not a lot higher. So it is having a bit of a challenge right now to push on. Of course, if it gets above that recent high of 309, it's got the potential to go on and trade right up to around 340, 350. But at the moment, I would say if it falls back below this low here, what's that one there, Dale? Can you read that one?
Oh, now I've got to put my glasses on. $2.77.
Okay, so if it falls below that low, then there's a potential for it to fall down, continue to fall down.
Question, Phil's looking for a stock to buy because he's saying, I want to put another stock in my portfolio. Would you look at this stock if it traded above that high?
So you're saying, I'm not talking about Phil, you're talking about me, if I had one stock, because I'm not giving Phil a recommendation on a particular stock to put in his portfolio.
Just answer my question. Phil's looking to put another stock in his portfolio. Is this the stock he should be looking at, or is there other better choices for him right now?
I wouldn't necessarily say that there are better choices because there are a lot of stocks that are at highs at the moment that could be peaking. So I'm not necessarily going to say that there's always a better stock, let's face it. You just want a blanket answer, but that's not really going to help him. So he's asking about S32 and what I'm saying is that this is a really good stock for a portfolio, but it's a question about whether it's going to continue to go higher. If it starts moving up again, then it could go higher and that would be an indication that the stock is going to rise and therefore maybe an opportunity. But if it pulls back, I wouldn't just jump in and buy it just because it's got cheaper.
I tried, Phil. I really did try for you, Phil. I really went in here pushing for you, but she's not giving me another stock. Okay, but thanks for sending that in. The next question is from Steve, who says, hi, Dale and Janine. My question is, when I believe a rule has been triggered to buy or sell a stock, should I place a limit order or buy or sell at the market price? Love your show, learning heaps, and keep up the good work. Regards, Steve. It's a question we get every single month, doesn't it? People not sure how to place their trades when they're looking at it. If you get a buy or sell signal, generally there's two questions. If you can place the trade live in the market, generally I just do, if it's a good blue chip stock, just put it at the market price. That's pretty much as simple as it is. But if you're somebody who can't be there on the market open and you know you're not going to watch it during the day, you need to put a limit order on it. So let's say you start work at 7 in the morning and you're out on a mine site and you just don't be able to watch it, do a limit order. That's really what you do. But if you're somebody who can be on the computer and place the trade themselves, just go market order, it's fine. But the provision is it's a bigger stock. I'm not talking about speculative stocks or very low cap stocks.
And you have to be mindful, if you put a limit order in, there's no guarantee that you're going to get filled. So that's the other side of it as well. So that's, a thought, because the next day the stock could do something different and then you might be thinking, why didn't I just put the trade on? I think what you're saying is once you make up your mind to sell the stock, just get out of it.
Just get out of it. That's pretty much what it is. Okay.
Okay, now we've got a question from John. Hi, Dale and Janine. Thanks for a great show full of information for anyone who is looking to trade. I'm interested in your top 10 priority of analysis you would look for when selecting a stock. Thanks for your time. Kind regards, John. My top 10.
Top 10. Listen to Dale.
Do you want to have a look at the big list?
Listen to Dale. Listen to Dale. No, it's not that. What would you say to John?
Look, I'd say, that there's a long answer to this question and a short answer. The short answer is that you have to do the training, okay? The long answer, we could be here all night talking about what you put on that list, because, and going through what's better, but just choosing stocks that trend well is a really good start.
Yeah, I think from reading between, I don't know, but reading between the lines, and John's asking how do we analyse a stock? And I think that's what he's asking. But what you're saying is we can't take you through those 10 because there might only be 5 things or 6 things, and it depends on the stock itself. But it's not about, the last thing you do is analyse the stock. Everything else happens before that. And I think
that's a really good point.
Really that's the end point of doing everything else right. And it's like, if I was to, if I wanted to go from here to Sydney, the first thing I need to do is figure out where I am. And the second thing is where I want to go, and that's Sydney. Then it says to me, okay, so well then how do I get there? I can walk, I can ride my bicycle, I can ride a motorbike, I can get on a car, I can catch a train, I can catch a plane, or I can hitchhike. you know. So how am I going to get there, and which is the best way of doing that? And then there's all sorts of other steps in between all of that. So pretty much people just saying, well, how do you analyse a stock? That's a different thing. So we're talking about buying liquid stocks. We talk about buying stocks that are generally the bigger stocks on the marketplace. You're talking about...
He may be wanting to just confirm also whether his process is the right way to go. That's another thought I had.
Yeah.
You know, he's sort of wanting to compare the steps that we go through or the analysis that we'll look at.
All of ours
first.
is about money management and protecting our capital and looking for low risk trades. That's really what we're doing. So when we analyse a stock, we're sort of... We're trying to analyse it, so not trying to knock the trade out.
But it's got to be fit for purpose as well. So you've got to decide, like you're saying, where you are and where you want to go, and then the type of portfolio you want to run. So you're selecting stocks that are appropriate for the strategy that you want. Not, okay, I've got a few, ideas like is a stock trending and things like that. And now I've got to go and find trending stocks. But I could find trending stocks that might not suit the type of portfolio that you're wanting to build. So that's what really the message Dale is trying to give you.
Is it short-term trend, medium-term trend, long-term trend? You know what? There's so many variables.
But it's really confusing for people, isn't it? To just work out what do you actually do once you've got a chart and when you're trying to choose stocks. How are you actually applying the analysis and what's the process? And having a process is key to anything. So, it's about working out a process that works for you as well. That's what we teach people: how to work out a process and how to tailor it to you, not a one-size-fits-all approach.
So in giving him an answer, we really didn't give him an answer on how we analyse, which is fine because we can't. Because
well, the trend is always something that we look at, but the exact detail, we've got a checklist that we go through of things that we apply to charts. Like we show you the monthly chart, and we show you the weekly chart, so it's always starting on that monthly chart when we're looking at stocks. And, I remember you at some workshops, you would bring up the top 100 stocks and start on the monthly chart, and then that would be a process to help people to really, simplify things and be able to select stocks that way.
Cool.
All right, our next email is from Darren. Hi Dale, love watching your report each week. Can you please talk about MCA? Kind regards, Darren. So he likes your market report each week.
Isn't that nice of him? So let's have a look at MCA. So it's obviously taken off like a rocket over the last few months. So it's gone vertical and it's just coming back at the moment. So looking at this, up at 48 cents, a very liquid type of stock, and it's come off quite heavily actually. That's probably why he's asking us. So since this high back through here, it was down at one stage around 25%. Currently, after yesterday and today, it's down about 19%, but I don't like it. I don't know about you, Janine, but I don't like it. It's not super liquid, and I think...
Look, I don't know what's happened to the left-hand side of the chart. There's that big gap. Do you think it's a backdoor listing or something?
I think that's probably a backdoor listing through here because obviously there's be different stocks coming right down to this sort of level back in March 2011. If you want to check that out, mate, you just go to the ASX website and look at it and look at what happened around that date. But they've probably done a backdoor listing. But
the company name intrigues me, Murray Cod Australia. I mean, I'm always interested to find out what new businesses are developing, and they may be a really great business. You don't know, but the liquidity is the only thing that concerns me on the weekly chart. They're just not big enough to interest me at this point.
I mean, in this last week, 637,000 shares multiplied by 40 cents. So that's a couple of hundred, not even probably $300,000. So it's not a lot of money, and that's really what we're talking about.
So that increases your risk significantly to start with.
But you don't say whether you're in the stock or you're not in the stock. If you're looking to buy it, sit back and wait. If you are in the stock, just set a stop loss, mate, and that's what I'd be strongly suggesting you do. But moving on, we do have a question from Manny who says, hi Dale and Janine, thanks for your work. Could you please have a look at this very small cap stock, CPV? I had traded this stock a few times last year, but now decided to stay a bit longer. His entry was 31 cents. Looking for your thoughts. Thank you. Kind regards, Manny. So let's go and have a look at this stock for Manny. Another sort of small cap speculative stock. What do you think?
Yeah, look, there's not a lot of history on it. So at the moment, we've only got a couple of years' history, which makes it a challenge to start with trying to analyse it. Because when you're analysing the history of a stock, you really need a lot of data to get a reliable result. It's all about that statistical analysis of doing a test on a stock, and then, it's whether they're testing on pharmaceuticals, you're testing on stocks, you need the reliable information to start with. Otherwise, your test is almost null and void. So, being able to test rules and road test them to see how they perform in all conditions over time is so important in choosing a strategy. But you don't have a lot of data to do it here.
Well, I think Manny's he's bought it at 31 cents. And now he's asking us our opinion, which means he's afraid of he's losing more profit because it's come off that high pretty dramatically.
Yeah.
So, and it's showing me you don't have an exit strategy on this one, Manny. So I think you do really need to have that. He's probably asking us, well, do you think it's going to go down to my buy price again at 31.5 cents? And the answer to that is it could, but it may not. And that's really why we have exit
if you were
strategies.
trading stocks like this, which you don't, but if you were, would you
I would
trade
still
it?
be in it.
Would you exit on the daily chart rather than the weekly?
I'd be taking I'd be doing all my analysis on my weekly and monthly. I'd be doing all of that
To work out the forecast.
What I think it's going to do. But then I'll probably go down onto the daily chart and maybe take a tight exit. But again, even some of these small stocks, I'll still take an exit on a weekly chart most cases, but generally they fall out of bed a bit too fast. And if you look at...
so what you're saying is it could come down, fill that gap, rebound a little bit and give you a potential exit after that.
Yeah, it could do that. So, right now, if we look at how far it's fallen, I mean, it's fallen from here. We're talking it's down around 43% at one stage.
And still no exit on the weekly. It just goes to show, doesn't it?
Yeah, so it's about where do you exit this stock, and it's about really understanding where it's going, but it could come down into that sort of 50 cent mark. And then at that time, Manny's probably going to be going, oh my God, I've lost most of my profit now. I'm down 50, 60% on where it was. I could have exited. That's what a lot of people say.
Yep.
Oh, I should have exited when.
And the challenge when a stock's pulled back that far is it makes it much harder to get back in again.
Correct.
Using proper rules, so until they show up on the chart. Is that all you wanted to say?
That's all I wanted to say.
Okay, now we have an email from Thomas. Hi Dale and Janine. Looking at Telstra Corporation Group ASX code TLS, it can be seen that there is a short-term bullish trend recovering from the low of the past years. However, is it possible for Telstra to keep going up and return to its highs merely due to technical indicators and chart patterns rather than an impressive business performance per se, as its revenue has not grown much in the past years? Thank you so much. Cheers. Kind regards, Thomas. Interesting, isn't it?
I think it's interesting how he's phrased his question. Like, technicals don't make a stock go up and down. Only the increasing revenues do, or the size of the company,
or the perception.
It's the profit the company's making. If the perception the company's going to make more profits in the year or next 2 or 3 or 4 or 5 years, the price of the share will go up. Technicals just tell us what the stock is doing now and what the likelihood of it is doing in the future. And I think that's what he's asking us to say, well, can we ascertain from a technical perspective whether this is more medium to longer term bullish? And I think it is.
Well,
but
I think
it's going to be a
also
slow
saying,
starter. It's going to be a slow product.
I mean, how is it that Telstra can go up if the fundamentals are not supporting it?
Because they'll catch up to it.
Yeah, well, that's what we're talking about in the analysis, because in theory, the analysis is telling you what's likely to occur. The news reports come out about stocks all the time and markets, and then we think, oh, okay, that's interesting. That was what was going to cause it to turn or go up. But long term, what would you say about Telstra?
Well, I think long term this stock is bullish because I think it's like AT&T in the US. It's going through the same sorts of things as Telstra. They're big dinosaurs. Come over from decades and decades of running the old phone systems and everything else, and they're having to reinvent themselves. Like even 15 years ago, I saw, I think it was Ziggy Switz, I can't even say his name, Ziggy from Telstra. I saw him present saying, well, Telstra's now a media company. Well, Telstra's not a media company. Now, even really tried to get into it. So where is it going and what's it doing and how is it making money? And that's the thing is, it's keep morphing into certain different things. Now, it's the biggest mobile phone provider in Australia. So where does it make money and where's it going into the future? I think once it's getting there, I think. And I think long term it's bullish, but it's going to be a plotter, mate. It really will be a plotter at this point in time. You're not going to break records with it, but it'd be a nice one to put in a super fund, I think.
Yeah, and it can also be good for short to medium term trading as well.
And it can, if you know what you're doing. Yeah, it trends beautifully when it does trend, isn't it?
So is that all you wanted to say on Telstra?
That's all I wanted to say.
Great, because it's time that we get into tonight's topic, top 5 ASX cannabis stocks to invest in 2021. This is a somewhat controversial topic. Cannabis stocks, otherwise known as pot stocks or marijuana stocks have become a hot commodity to invest in locally and globally. Many investors are wondering whether this is an area that they should be alert to investing in 2021 and what are the risks of doing so. The other side to this is about raising awareness because we want people to go and do their own research to understand the potential benefits of medicinal cannabis and cannabis products. And there are claims that these products are helping a lot of people manage pain. But our focus tonight is to answer questions that are being asked by investors, as well as share our thoughts on the top 5 ASX cannabis stocks to invest in 2021.
Wow, in managing pain, I know a few husbands that smoke a bit of cannabis.
What are you trying to say?
Nothing.
You better watch it.
Cool. In terms of the market, it is important to be aware that billions are spent on medicinal marijuana or cannabis products around the world each year. Now, forecasts indicate that the US is likely to spend around $30 billion on legal cannabis by 2025, and demand for medicinal cannabis products is also projected to grow in other regions, including Asia. Now, what's exciting for Australian companies in this space is how Australia is well positioned with the perfect climate to produce cannabis and to supply Asian markets. Now, according to research by Fresh Leaf Analytics, the medicinal cannabis market tripled in size in 2020.
So where is Australia positioned on this controversial area? The Therapeutic Goods Administration, or TGA, finally approved the sale of low-dose cannabidiol. Can you say that, please?
Cannabidiol, I think, I don't know.
Or CBD without a prescription in February of this year. So there is still a lot of work to be done in this space to produce the clinical evidence as to the success of medicinal cannabis in treating medical conditions. We intend to share a brief overview of the company, but you will need to go directly to their websites to read the full scope of what the companies do before sharing everything on the chart. So we want you to do that right now. That's your homework.
Okay.
No,
Now,
I'm only joking.
as you can guess, Janine and I are not experts in this product. I mean, you know, from our point of view, but we are experts. Or what we are expert at is the analysis of any stock or commodity or currency or anything or any market from a charting perspective, so we can look at it from that point of view. So let's take a look at some of the charts of some of the stocks that are currently operating in this space at the moment. So let's get onto the screen now and have a look. Now, what's the first company?
I thought you were never going to say that.
Oh, okay. So this one is Incanex Healthcare. Now, these people develop medicinal cannabinoid pharmaceutical products and is capable of exporting globally. So that sounds good.
Yeah, so that does sound good. And recently we've seen a really strong rise, but you know, we don't know the history about these companies and the listings. So you know, we don't know whether they're backdoor listings, what's happened with the stocks over time. We're just looking at it from a point of view of what's the stock doing now, and where are we likely to see it go based on what the chart's showing us. So to me, this looks in its very infant stage of moving up, but it has had a really strong run over recent months from the end of 2020 through to 2021. So you'd think, given its pullback at the moment, that it may slow down for a little while.
Yeah, and it probably would be because it's done very, very well. I know, like last year, I think it was either earlier this year or late last year, the European Health Organisation decriminalised cannabinoids.
Right.
Not marijuana itself, but this medical use of cannabis oils and stuff like that, so which is helping it. And it is growing throughout around the world, this whole movement. Now, when you're looking at these stocks, what should people do? Are they looking at, you know, putting a big position size in, or what are you suggesting people do?
Well, look, I mean, it's your own decision, obviously, what you're comfortable with. But you know, when you're investing in any of these sort of areas, it is a speculative area to put your money into. It's because it's not that we don't think that, you know, that the areas of research that they're into are good, and we want to support that research to keep going. It's more, you know, from an investor's point of view, this is what we're answering.
Okay.
What's the risk involved? And so therefore you have to be mindful of that. So there could be a portion of your portfolio that you might have some of these risk type assets in, but it would only be very small, and the majority of investors probably wouldn't have the, I guess, psychology to handle the volatility that these sorts of shares are going to bring when they move.
So basically what you're saying is allocate a small amount of capital and maybe then diversify across a couple of these stocks, not just one of them, or what would you be saying?
Look, I guess if you've got a portfolio of stocks, and we're based on having typically 8 to 12 stocks, and more preferably for investors 10 to 12 stocks. If you use up 2 positions in your portfolio for the marijuana stocks, that's a big portion. If you've got 10 stocks, that's 20% of your portfolio. Why would you do that?
Why
it
would
doesn't
you do
make
that?
sense. So,
that's what I'm asking.
you'd have to decide whether you're going to use an equivalent of 1 position and buy 2, maybe.
Buy 2, yeah.
Rather than just buying the 1 out of, your 10% of your overall portfolio. That's what I would look at. But,
okay.
it's and the stock that you choose, I would tend to choose the bigger ones.
The bigger ones.
The ones that have a bigger market capitalisation, because they're less likely to be, I guess, hit as hard in a really quick sell-off that could happen on the market from time to time.
Okay, next stock. So you bring up the next stock. Which
So
stock?
IHL, we like this,
That's
but
IHL.
at the moment it's slowing down, so we'll just leave that for
Okay,
now.
so this one's Ecofiber. Now they say they plan to be the global leader in hemp technologies and aim to own and control most attractive and sustainable parts of the value chain selling hemp-based products.
Well,
so
I'm
these
not
aren't-
sure what's happening with their business, but the share price isn't reflecting what they're trying to do.
Yeah, because you can use hemp in clothing. They use hemp in all sorts of different materials and also building and
So
home
I
stuff.
don't care what the story is. Sorry to be blunt. I mean, but when the chart's doing this sort of
It
thing,
looks terrible, doesn't it?
It looks terrible, and you'd steer clear of it until it turns around. And so you want to allow other people, and this is what it is, other people to put their money in it to turn the stock around first before you're willing to risk your own.
Let them play in the too hard basket.
That's right,
So
because
that's what
people
you're
will
saying.
try to pick the bottom here. And it could bottom out soon and then turn around and start levelling off, but I just wouldn't want to pick that right now.
These stocks, these are the highest market cap stocks? Or
Yes, we're going in order.
We're
at the
going in
moment.
order of market
But I haven't got
capitalisation.
all of the stocks, obviously, in that sector. So there could be others that are
Okay.
equivalent in size that we haven't talked about on the show.
Okay, so let's now move on to the next one. So the next one here is Can Group. Now, this was Australia's first company to be licensed to cultivate medical cannabis. Now, Can's vision is to be a leading developer, supplier of cannabis and medicinal cannabis products.
Yep. Now it's actually
Looking a bit
the
better.
company. The story behind the company was really quite great. To hear that they were one of the leaders into this, and they obviously have a lot of knowledge and know what they're doing. But at the moment, the market's not supporting them because that's why the share price is not rising. So I think that some of these stocks will come into their own, but it's about being patient if you're willing to take the risk. But I wouldn't say buy now, having patience for them to rise. I'd say watch now, having patience for them to rise, and then get in at a lower risk time when they're moving up.
But this is an interesting story. Like you can see here this move up out of 2017 and around that a lot of people were talking about, hey, cannabis, 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 cannabis. And people were trying to jump in on the story. And
Yeah, and it only takes for that to start getting fire, a bit more fire under the belly and a bit more talked about for these stocks to go up on perception.
Whereas obviously what's happened is obviously that most of the people I would suggest would have been buying in around where my pointer is.
Yep.
More so because you can see the volume through here is a little bit higher than it was in these early stages. So more of the people would have got in from halfway up to the top. And I would suggest a lot of them are still hanging on to that share.
Yeah.
Because
Well, look, there's a stock, Little Green Farmer, which is the last one. Is my baker's half dozen. I always try and throw a few
so
more in
5,
there.
we've had 6.
But I don't know if the director's going to allow me to get another
So
one
let's
in.
go on to the next one. That's Can Group we just
Okay.
looked at. So the next one now is Botanics Pharmaceuticals. Now
Yes.
this is a clinical stage synthetic cannabinoid pharmaceutical company with a targeted pipeline of dermatology and antimicrobial products. That's hard to say, isn't it?
I was hoping that you'd
Dermatological.
get that right.
Okay, that looks quite speculative, doesn't it?
It looks very speculative. Look at the illiquid nature of the share. See how you can see all of these bars moving side by side on the chart there as the stock's trading back in 2018 where my cursor is. And again, that's just an indication of how illiquid the stock really
But
is.
people were saying, hey, Janine, it's only 8 cents.
Yeah, why not?
Why not jump in?
It's a
and,
really
like,
good area. There's a great story. That may be so, but you don't want to risk your money. Like, this move along the bottom here, when would you buy it? So as an example, the stock was tracking that off the bottom, was trading up, started to move up strongly. That point there would probably be the point where you could have bought, but then you need to understand the personality of the stock because there was no exit really, unless you use the trend line. You might be able to get a trend line up underneath there. But you've got to be be able to look at the history of the stock to then know, well, okay, if I can get in, that's great, but then how am I going to get out?
Yeah. I mean, if you'd put $10,000 in off the bottom, you'd have 100 grand by the time it hit that one. But the point is, you're saying is it doesn't matter. If you can't get out, you can't get out, or if you don't
But
have to
don't just get in on a story in the media, get in on the actual fact and the money being behind it, pushing it up in those sorts of nice little patterns. Yeah.
Okay. So this one you're not sort of a fan on at the moment. So let's get into the next one. The next one's called Althea Group. These are an Australian licensed producer, supplier and exporter of pharmaceutical grade medicinal cannabis products, and there's a lot more to this business. Now, well, as you said, we want everybody to research themselves, because I think that's a really important thing. Is we can look at all the charts we like, but when you're looking at more speculative type of companies, you have to get into and do the research. So you have to go to the ASX website. You're going to have to download their annual reports, get involved in all of that, and get up as much research about what they're doing and why they're doing it and their prospects from there, because it's not just good enough to look at the chart. The chart's great. And Janine and I can trade on the chart and look short-term trading these stocks on the chart. But the less liquidity you have, the more uncertain they are. And it's like, how do I say it? It's like having the law of averages. If you've got two people in the room, the averages you're going to get aren't be solid.
Well, they're just more unpredictable.
Unpredictable. So whilst we can do analysis on the charts, the analysis won't be as solid, and to do really, really solid analysis on them, you really need to put hours and hours and hours into these ones to really get it right.
Yeah, I think you've made your point.
Okay, all right. So now you want to talk at the chart. Okay, thank you, Mum.
Okay, so back to, what did you call this one?
I don't know.
Althea Group? AGH.
Althea Group.
Now, looking at this one, I mean, it's broken some of these lows here, which is the real concern. So there was a sideways consolidation that was setting up beautifully. If it had risen out of there, it would have been a really nice little opportunity, but it's gone the other way. So it's never about getting it cheaper, especially when it takes out support. So it really needs to start trading back up about 50 cents or thereabouts for me.
But if it can keep holding up about that 30 cents and start moving up again, it could be okay.
It could.
But again, it's one of those things that it could be, if you do go into it with money that you can afford to lose, then go with it for long term. The next stock we're going to talk about is Xalira Therapeutics. Now, these are global therapeutic medicinal cannabis company developing a range of cannabis-based formulations to treat a number of medical conditions.
Yep. Now you can see.
I think I've got a medical condition now after reading all those big words.
I think people are getting the understanding of looking at these charts and comparing it to some of the big stocks that we look at, and the difference in these illiquid stocks, and how much more of a challenge or how much harder it is to actually extract a profit out of it. But it can be done. I mean, look at the rise that happened in this space. Again, that sideways consolidation, a nice little move out here in September 2020. The stock went up. You actually would have got a decent entry potentially in here when the stock traded back. You may have even had a trend line up underneath there, but it came back so far that you lost so much profit off the top, unless you were trading it on the daily chart. But you can't just trade the daily chart, because you would have been taken out numerous times prior to that high. So it fell nearly 40%, again, like that other one you looked at.
So what you're saying is trading these stocks is a lot more guesswork, and if you're making money, it's a little bit more luck. Unless you're doing a lot of research. I think what you said is really important. You need to look at the long-term picture of the stock, do an analysis forecast based on the big picture, and then go to shorter-term trading it. Okay.
Because how else can you do it when you're looking at the way that these things pull back?
Okay, so now we go to this little green thing. Was that what it's saying? The little green farmer.
Little green farmer. This is a stock that I remember when that hoo-ha was coming out about some marijuana stocks some time ago, and it hasn't been trading on the market all that long, but it looks much better than some of the other ones. And if it happens to find support somewhere around 50. Sort of about 55 cents, somewhere through here, 50, 55 cents, then it may actually set it up for the next move up.
It looks a little bit more liquid than some of those other ones too.
Yeah, so look, it looks okay, but at the moment, still not a buy right now in our book.
Okay, well, that's it for, I think it's about time we get back into some more emails for everybody. Now, next is a question from Dave, who says, hello, can I have your technical analysis opinion on the chart for Wiluna Mining Corporation, please? And thank you, Dave.
Right, now a lot of these mining companies, a bit like the marijuana stocks, they're really quite volatile. Look at that on the monthly chart, the history of this thing. And this is where people buy stocks and they've got no idea.
Both start with them, marijuana and mining.
Yeah. this stock starts with W, I hate to tell you.
Okay, but it's in mining.
You want to be right, don't you?
Oh, no, but...
All right. Okay, so you can see these huge volatile moves that we've seen here, one in June 2007 and one in August 2016, so almost 10 years apart, but the same sort of volatility happened again. And sometimes you'll be thinking that these stocks settle down and then all of a sudden they take off again and make these crazy moves like this stock did, unless it's a backdoor listing, which we don't know the history of. But look at the weekly chart.
Whoa.
It's very illiquid,
That's
just
quite
looking at
liquid,
those
isn't it?
bars.
What's the attraction of these ones? I mean, I don't see the attraction on these ones.
I don't know. I mean, maybe they've read a story about the stock and then thought this could be an interesting play. Maybe they work for the company. I don't know, but it doesn't make sense to me why you would do that.
Is to try and pick some of these sorts of stocks and hopefully you get
Win
50,
big.
100% and win a bit of money and things like that. I mean, one of our guys was chatting to somebody the other day who made like 1,000% on a stock, but it was only like a 1 cent stock, and it's like. But then he's asking us to teach him how to trade. And I think if you know how to make 1,000%, then just keep repeating that process.
Yeah, but that might have just been luck.
It just would have been luck.
Because how many did he put his money into that went the other way?
And that's what you don't hear. A lot of these people, they don't tell you the ones that I don't do on them. Because what are the chances of somebody getting this right?
Really low. Unless they, you'd have to use some really good rules on this to get into this stock at an appropriate point. And then how do you get out? Again, it's going to come back to the daily chart again, I think.
Which a lot of people can't handle because of the volatility on it
Yeah.
anyway. Okay, so you don't really like WMX.
Nope.
Okay, so let's move on.
Next is an email from Andy. Hi, Dale and Janine. I've been tempted by HeraMed, HMD, after a couple of great announcements and the chart started looking bullish. I got in at 15 cents last week. What do you guys think? Well, it's gone up from where you've purchased it, so therefore it's done reasonably well to start with. But again, another liquid share. I'll just move the chart across so we can have a better view of it. But you can see the nature of those bars. A lot of them track each other side by side through here, which is a high indication of the liquidity. But if you're not sure, you can always go and have a look at what the volume is. So it's about 4 million, is it a week?
Yeah, 3.8.
And you're talking 10 cents or 15 cents. So, there's not a lot of money being traded there. So it's going to be high risk. But right now, I mean, he's in it. If I was in this stock, I would stay with it right now, but I'd be looking for a short-term exit, given only based on the fact that how volatile this stock has been. What else have you got to go by, really? Look at the moves.
I mean, it's when you're going to. The point is it's different. In property, you make money when you buy by buying the right property. In the share market, you make money when you sell.
Yep.
And that's where people struggle all the time. It's like because he's making money at the moment, right? And he'd be going, okay, well, he could be going up. But then like the other person, they're asking us to look at a stock because they're losing profit greatly at the moment on another more speculative type of stock because he doesn't know how to sell. And so just because you've maybe, and I don't know why he's bought the stock, whether it's a tip from a chat forum or whether it's something he did all his research from. He could have done a month's research on this and it's been a great trade because of all that research. But to me, it's about if you're actually buying it, you do need to know when you're going to sell it and how you're going to do that. Otherwise, you're only taking on one part of the equation, and it's like sitting on a seesaw all on your own. It ain't going to go anywhere.
Look, at this point, clearly it's going up. It's there's some resistance around here where it's just hit recently, so it may pull back temporarily. I just want to just have a look at that daily chart anyway. Shall we go? So it may pull back, trade back below the 20 cent mark before we know whether it's going to keep going up.
Yeah, well, I mean, today we've got a bar that opened really high and it's closed really low, so it's possibly going to come back down into this 18 sort of cent mark, but you don't know. And the thing is, it could go the opposite to these sorts of stocks, isn't it?
True.
Okay, that's it for the whatever it is, HMD. Now, our next viewer question tonight is from George. Hi, George. He says, hi, Dale and Janine, or Janine and Dale. Can you please comment on BOE and or BMN and or PDN and or, well, there's a lot of and ors, mate, and or the uranium sector as a whole. Thank you so much, George. I think we're going to do Paladin, aren't we?
Yes, looks really interesting, doesn't it? It's just gone gangbusters more recently, and potentially all of the talk about uranium and how this resource has potentially, got huge growth benefits in the future. They're trying to really pump it up at the moment. I don't know if you've noticed.
No, I haven't noticed that one.
So look, I mean, not Paladin itself, but I'm talking uranium.
Uranium itself.
Yeah, so it's possible that this is, I don't know what Paladin's been doing, because I haven't followed it closely, but it does look good right now, and that's really what counts, isn't it? So the fact that it's moving up, it's strong, it's showing that it's having these nice little sideways consolidations and then breaking out of them on the upside is really good. I mean, I'd like to see it pull back and test before it goes up again, but it could just go straight up from here.
Yeah, well, it's interesting. I mean, obviously in the uranium sector, obviously the uranium is generally used in power production. Now, I know, there's a lot of conjecture about what we're doing over here in Australia with in terms of creating power.
Yep.
And obviously China are building a whole lot of coal-fired power stations across China. They haven't gone nuclear.
But are you thinking that, like with this stock in particular, are you thinking that it's already run its race, or would you say it's got further upside?
Look, I think if George is in it, then he should stay with it, because I think it looks great and it's a nice stock. It is a quite nice stock that will actually trend. But if he's not in it, I'm not sure I'd be jumping into it. Yeah, I think it's a bit risky if you're not already in it, George. But if you are in it, I think I'd be definitely staying with it, because it might not be the end of the run yet, but I don't know how much further the run's going to go. That's really my question on that one.
Yeah, I mean, it's got the potential to go to around 80 cents or 80 or 90 cents. So, that's the upside potential more medium term, but whether it does that in one go right now, it's going to continue up. You just don't know with these types of stocks.
No, you don't. But there could be another 10, 20, 30% in it. That's what you're saying.
Yeah.
Yep. Cool. All right. So that's it for Paladin.
Yep. And look, obviously you've got to have a stop loss. So we haven't talked about that, because we've always got to be talking about the downside risk. So I just want to mention that.
Okay.
So if the stock were to fall away, he needs to have a stop loss in place.
Correct.
Yep.
But I think a trend line would work reasonably well on this one.
Possibly, but you'd be thinking that if it goes below this low here, which
definitely I'd be exiting.
You'd have to get out, because that would just say that it had broken all of that support.
Okay.
All right. Next is a question about a stock from two viewers, Kevin and
Tekla Hans.
Okay, Tekla Hans. Hasn't he sent us an email before?
I believe so, yes.
We will only read one, as the response will satisfy both of you. So we chose Tekla Hans, who says, "Hi Dale and Janine, I'm currently looking at infrastructure-related companies on the back of the 2021 federal budget spending on infrastructure. I believe CIMIC Group is one of the biggest companies in the sector. Could you please share your technical view on the current price action? Many thanks, Tech." Very good thought.
Well, I think this is one of your favourite companies, isn't it?
It used to be.
It used to be.
until they were taken over by an overseas company. Not taken over, but a big majority of their shareholdings owned overseas. And so that then prevents, in my opinion, the potential that the stock had. And that, in my opinion, is why the stock had the fall that it's had, has been so volatile in recent years. But it's looking a bit better of recent weeks. However, it's got a real challenge to get back above these highs here.
Yeah.
And who's going to be interested in it? You need to really look at the structure of this company, who's holding the shares, what are the plans for that company? Is it going to be taken off the Australian market at some point? Just do some research to see what's really going on with them. At the moment, it's going up. So if you were in the stock, then you'd stay with it, with the view that it may get stuck at around that $26, $28 mark where it's met resistance before.
I mean, obviously it's sitting there around about $21, $22 at the moment. So, even up, if it gets back up to this $28,
but I wouldn't be hoping, necessarily for that, because if it falls below this bar, the week ending 14th of May, which the low is 18, is it 69?
Yep.
Then it's more likely to keep going down.
Yeah, I mean, there's a lot more volumes coming through it at the moment, isn't there, compared to what it was back in 2018 and 19. So since the COVID low, which is this March low here, but really it's not going anywhere, is it? Like, it really
I just don't like the fact that it's taken out the low here in October 2020.
It does not look, it doesn't want to trend at the moment, and that's the issue. I think we're talking about. It's just sideways is a trend, but it's, unless you're really spot onto it and you'd be trading it on a daily chart to make runs out of it, because some of these runs are reasonably good from the low to the high. You're looking at there's 40-odd%. So it can run if you get it.
Yeah, but nobody's going to pick it from the bottom.
Yeah, but Tekla Hans, and I think it was the other gentleman's name, Michael, was it? I can't remember. But Kevin, they did mention whether they're trading short, medium or long term, but I would guess they're probably looking more medium term. But right now I think it's like, I'd agree with you, I reckon. Yeah. Okay, next we do have a question from a lovely lady called Iris, who says, "Hi Dale and Janine, I am a share trading starter. I bought RNT at $2.90. I wanted to hold the stock long term, and then the share price kept dropping and I kept buying until my savings dried out. Now my RNT holdings dropped nearly 40%. I really don't want to sell now and lose thousands of dollars in just 3 weeks' time. What's your thoughts? Any recommendation? Thank you so much, Iris. So
I think tonight's been a real lesson in what happens with stocks who have liquidity issues that are on that lower end of the liquidity, and the volatility can be quite huge. People buy into them, they don't know how to handle them, don't have rules to manage the risk, and get stung. So like a simple rule would have protected the trade in this case. Trading Mentor course could have covered this one.
Well, this is not even a stock a newbie should be even trading.
No, because for a newbie...
Yeah, she just says she's new into trading.
And that's not something that she can necessarily help, because you only know what you know at the time when you're starting the stock market, and you're looking for opportunities in areas that you think are likely to do well, and that's what she did. So
yeah, but unlike the email we had near the start of the show where the gentleman read my book and everything else and started buying the top stocks, and he bought CBA and he'd made 8% out of it and giving him confidence. That's where newbies need to start, at that end, not at this sort of end. And that was the first mistake that she's made.
Well, I think she's really brave in actually putting the stock up, and thanks for doing that, because this is a really good lesson to not only help yourself but help other people as well.
But to me, the other thing is, don't keep putting money into a stock you're losing money on. And I see it so often. I've had this just this week.
Well, that's what the industry tells people to do.
But I've had 2 people this week that are doing exactly the same, like not just Iris, but a gentleman sent an email through and he kept buying as the thing's falling, and he goes, what should I do? I go, don't do that. Like, don't keep buying something you're losing money on. It defies logic in my case. And I'm not trying to be mean or rude to Iris. I'm just saying, why would you keep buying in? And the person was saying, well, I want $1 average. And I go, no. Like,
and on a volatile stock.
On a volatile stock.
I mean, it's one thing to do that on a Commonwealth Bank or big stock, and even then I wouldn't do it, but it's one thing to do that, but then to do it on a stock like this, low volatility.
Yeah, so Iris, we don't have any good news for you right now. It looks terrible, this
But isn't
stock,
it interesting, like people who don't necessarily want to take high risk are taking high risk.
Taking really high risk. So while she doesn't want to take a loss at this moment, I understand that. What happens if it goes down to 12 cents? Yeah. That's the question. So you do need to have a line in the sand, Iris.
Good point, really.
So, but
now we've got another question from. This time it's from Matt. Hi Dale and Janine and team. I have read both of Dale's books. Well done in doing the research, and of both of the DVDs from the investment bundle, and would recommend them to anyone looking to learn how to construct a portfolio. Could I please have your opinion on the following stocks? I will keep it brief. NST, it looks to have bottomed out, come out of a downtrend, and looks to be at the beginning of an uptrend. I do not have a position and am looking at potential points of entry. Thanks for your time, Matt. Did you plant that question at the end on purpose?
Absolutely not. Yes, no, I don't. I'm pleading ignorance. What question? I wasn't listening. And I wasn't my officer. NST, Northern Star, I like this one. Best stock we've looked at tonight.
Okay, so at the moment it's been going sideways in recent weeks. It's got the potential to go up somewhere between around 13 and around 15.50. Yep. At the moment, it's just tracking sideways, so you don't know. If it were to fall away, then obviously you've got to have your stop loss in place and manage that risk. It's got huge support under this $9 level across here with all these lows. Gold price is rising. Yep. So, you just have to be patient with stocks and just wait and see what happens, but have your rules in place to buy and including your exit rule. Okay, so basically what you're saying, he's saying it looks like it's bottomed out, it looks like it's doing in a new uptrend. So basically what we're saying is we agree with him. Mm-hmm. What we're saying is right now it's in a bit of a sideways move. So if it gets through this sort of area here and starts closing up over that sort of $12 mark, it could keep going. It could keep going up into that $13 to $14, $15 mark. Yep. That's what we're saying, yep. Yes. Anything more you want to say? Because you've done so well with that one. Nope, silence is golden. Silence is golden. So you get a huge thumbs up, matey. You really do from picking that stock. I do like it, and Janine likes it, as you said, and I think it's the best stock we've actually seen tonight. So, but we do now have a question from somebody called Wayne who says, hello, Dale and Janine and the Wealth Within team. Your answer to Brad's question last week on stop losses, trailing stop losses, was new knowledge for me. So many thanks. On the basis of your answer, can you look at EML?
on the 14th of May 2021 and advised what you would have done with this stock, as its price did a massive nosebleed from the 14th of May to the 21st of May. Now, I do not own this stock, but had it on a watch list. How does one recover from a fall like this? I thought that was a really, really interesting question that he was talking about.
Yeah. Look, when you're dealing with stocks like this, and you can see, the first thing is we've talked about stocks that can be quite volatile on the show tonight. Yep. We saw what happened in COVID. Now, this stock, look at how far it fell compared to a lot of stocks. We're going to have a bit of a look. So we can already see that the stock has fallen more than the market and more than a lot of stocks fell. So we know that this is a highly volatile stock, and in any sell-off, it's probably going to get hit quite hard.
Yes.
So therefore, that is one of the things that prepares you for how you're going to trade it.
Yep.
So if you're in this stock and it was rising up, you'd have to be watching whether it's actually going backwards or forwards, and by that you mean whether it's getting higher. You know, when it comes back, whether the lows are getting higher, which they were, but as soon as it actually started proving that that's not the case through here, it's telling you don't stay in it.
Yeah, now there was probably, I don't know what happened on that day or on that week, but there's probably some sort of announcement or something was going on at that particular time for it to drop out of bed. Now, one of my answers is SHIT happens on the market all the time, every day. So it's some of the times.
Now,
I didn't say it, I spelt it.
You did so.
I know I
it
spelt
doesn't matter if you abbreviate or not.
You just said if you say
Put
a
your
swear
bloody
word.
money where it
I don't have any. Can
belongs.
I use a credit card? Yeah, can I use a square word? Yeah, can I use a, can I swipe?
I got you, fair and square.
Can I bleep?
And I'm not competitive at all.
You're not competitive at all. So shit happens, basically. I'm going to pay for it. I might as well pay for it. I'm on the market, and sometimes you're going to get a stock
It's going
that
to
will fall out of
charity,
bed
so
on
you better swear a bit more.
Okay, it's what kinds of charity? It's my Dale's Fund, is it?
No,
okay,
it's not.
Cool. From that. But there was, our $2,000 trading mentor course has an exit signal before the fall. So often, if it's a good stock, it'll give you reasons to buy and it'll give you exit signals, even though sometimes they do melt down. But right now, I think how I would have handled that, our students would have been out of this stock, following their rules. Right now, if you were in this stock and that fall happened, you'd be trying to manage your exit. And I think that's probably the important thing. Not that he was in it, but if you actually missed the exit signal and you took that drop, you'd just be trying to manage your exit out of it, because something that drops that big in that short a time frame, something's wrong. It's not, they just don't drop like that out of bed for no reason at all. So you'd be trying to manage yourself out of it, and quite often you might see a bit of a bounce back up again, and that's also catches a lot of people, because it's almost like a dead cat bounce. They get in, or a sucker's rally, they jump in thinking it's cheap, it's going up now, it's going to go back up to where it was, and then only for it to fall away again. So just be careful.
Now, it may go up a bit, but not necessarily where it was. That's what your point is, isn't it?
Yeah, correct, because SHIT doesn't bounce.
You've really blown your dough this week.
I'm just doing it. Okay, so that's it for EML.
Okay, next is a question from Daniel. No more swearing. Hi, Dale and Janine. I was wondering if you could take a look at Bapcor Limited, ASX code BAP. Your thoughts on the stock for its potential over the next 12 to 18 months. I don't currently own the stock. Regards, Dan. Good question. Interesting stock. Look at all those peaks there at the top.
It's a lot of resistance, isn't there?
Isn't there? But if it gets through that, then it could go gangbusters after that.
A lot of resistance around that sort of area there. So
I like it at the moment, provided it stays above this low here. If it goes below that low, then it's history for a while.
Yep.
But if it manages to stay above that, keeps moving up, it's a really interesting opportunity. Now, the thing that people have to be mindful of is sometimes when stocks go to new all-time highs, they pull back and test.
Correct.
So you can be sitting there and thinking that you've got a really good trade that's in profit, and all of a sudden it pulls back into the sideways move. So just something to bear in mind if you are looking at this one.
Yeah, correct. And I wouldn't get into it till it got out of all this sort of area here. I think you'd need to want to have some clear sky above it before I'd actually get into it at that point in time, because it is being volatile around that area, because there's some reason it's not pushing through it at this point in time. So just be careful of it at the moment.
But it's a bigger stock. You know, we're talking about a company that, I mean, volume's been falling, which is interesting, and I'm not sure quite why that is, but we're seeing, you know, 4 or 5 million a week here. On a stock that's $7 stock, so a much bigger, more quality company to put money into if it does go.
Yeah, so if volume started to increase and it broke through those sorts of levels around that $8 mark, you'd have to give it a go, wouldn't you?
It would be an opportunity. You just have to be mindful of the downside and how you're going to manage it from a stop loss point of view.
Yeah, so that's a good question anyway. Okay, well, that's our thoughts on BAP.
Well, Dale, what a show we've had tonight. Lots of swearing, and we don't usually have that. But full of great insights and tips. But just wanted to share with everybody that getting hints and tips in our show, it's just not enough. Over the past week, I've read a few emails that have come in from some of our graduates who said before our course that they used to watch YouTube getting tips and then buying and selling stocks, which made them think that they were traders, and when this was not really the case.
Yeah, I have to agree with you. I mean, I don't know, I come across that all of the time too. So, I mean, often when I'm out and about chatting with people who tell me that they are traders, it's not until I really start asking them questions about their trading, you know, do they actually start to realise that maybe they're overestimating what they know and how good they are as a trader. Now, after all, you just don't know what you don't know. And I understand that, you know, there will be many of the people, you know, sitting there watching tonight's show thinking that they're traders, yet they are taking the time to watch and learn from what we do. And I suspect they're watching many YouTube videos, and so that must tell you something about their level of knowledge and experience in trading now. But as far as trading and teaching trading on this show goes, we really haven't got out of first gear, you know, or we never get out of first gear. We actually stay in the car park, you know, in terms of the level of knowledge and the level of understanding of the market.
And where people could go. So, you know, I'd rather be on the go-kart track. I don't know about you. There are 3 things that you or anyone can do from here, and they are do nothing, do something, or procrastinate. And we know only one gets you where you want to be or need to be. So which is it? And it's do something, of course. So that was a no-brainer, wasn't it? And so if you're someone who desires to be a trader and knows where they need to be to learn more, then take action and call our team tomorrow, as they're more than happy to spend some time with you. No obligation to help you. All you need to do is call 1300 858 272.
Okay, well, that is that's it for tonight's show. That's it. That's what they say, isn't it? And we do hope you not only enjoyed what we presented tonight, but you got a lot of value from our answers to your questions. So now it's your turn to help us, and hit that subscribe button now to say thank you to the team who put in a really big effort to bring you this show each and every week.
Also, remember to put this show into your calendar to join us right here on the Live Australian Stock Market Show every Tuesday at 7 to 8 p.m. If you'd like to have your question answered on the next show, send in an email to info@wealthwithin.com.au. Type Wealth Within Live in the subject line. Remember, you must email, and you must do so before 3 p.m. on the day of the show. Yeah, now, as always, thank you for joining us here on the show tonight. We hope you have a fantastic week. We look forward to you joining us again next week. But for now, goodbye, good luck, and good trading. Now, you better cough up. Yeah, go and see my wife. She's the banker. No, I want your money.